In this video, I'll be going over one of the most commonly used PD arrays, which is the fair value gap, or in smart concept, we call it imbalances, either in the buy side or the sell side. So first, let's dive into it to understand what is a fair value gap and how do you identify it. Fair value gap essentially is imbalances formed between either buyer or sell side or seller, and that is formed whenever price moves very quickly and leaving behind the imbalances. And typically this is formed within, you can see within 3 candle structure. So from the buy side, let's take a look. This is candle 1, candle 2, candle 3. In here, you can see between candle 1, candle 3, there is a gap. This is essentially the imbalances for the buy side. And smart money call it the busy. And then from the sell side, same thing, 1, 2, 3. And between candle 1 and candle 3, you leave a fair value gap. In between, this is the imbalances. And typically why this is important as a entry point is typically, let's go over the mechanism first, is why this leave behind these type of gap or imbalances. Usually when this happens, there's either a strong buyer or a lot of seller from institution buying that basically make the price go up very, very fast, leaving imbalances, right? Meaning there is a buy side imbalances, and meaning this is a sell side inefficiency. And other way around, there is a sell side imbalance, a buy side, lack of buy side inefficiency, which means whenever there's a price go all the way up, this become a magnet as a point where most likely will retrace back to fill it. Since a lot of time of institution, a lot of big buyers stepping in, always liquidity that push it up, it doesn't mean all the order can get filled fast enough. So typically once they push up, they'll come back and fill the remaining order. Okay, so that's essentially understanding the concept on how to identify fair value gap and how fair value gap is formed. Now let's jump into how do we use it. Okay, so step 1, identify a fair value gap. You need to understand, as before, you understand how it's formed. So how to use it, we need to wait until there's a retracement back. And how do we understand if there's retracement? We first need to understand the direction of the displacement. So for example, on the right hand side, this is a bullish example. First thing, we look for some sort of sell side liquidity sweep. There is what we call a stop hunt or a stop rate. You can see once the candle have rated these equal lows. So let me change color. These equal low, relative equal lows, once rated, and there is, we identify a market structure shift as a second point. This leave a imbalance of buy side imbalance, where you can see once all these liquidities rated, the prices push up very fast, and this become a magnet zone, which is this fair value gap or imbalances that we see will trace back into. So to trace back into here, this is our entry for the PD array of imbalances and for it to continue higher. Okay, so this is a bullish example. And same thing vice versa, if it's bearish, ideally we want to see some sort of buy side liquidity that is swept and then have form some sort of market structure shift or change in state of delivery, and then we look for some sort of retracement back into the buy side to continue selling off, right? So inverse of this. Okay, so one tip here is a lot of new trader, even though they're identifying fair value gap, but they're still failing to correctly to leverage it, is because you're not combining with the higher time frame, right? So I have a separate video, a previous video, I did a higher time frame on determining the daily bias. You always need to have good understanding where is the daily bias, the direction the market is going to trend towards today, and then you look for the PD arrays, which is under the lower time frame that will align with the higher time frame. Then those are most likely the PD array that will work out. Okay, the reason I'm saying this, for example, let's say if we take a fair value gap of there's technically a small fair value gap here, but you can see even though there is a break, but there is no market structure shift, they just grab liquidity, shift it back down, and continue up higher, and then you thought there might be a market structure shift here, but no, but it continued lower, right? this is not a valid, because overall the higher time frame is showing for this one on this day is going towards the upside, not the sell side. Okay, you need to understand the higher time frame, and later on we'll dive into more live example where I'll go over one by one when you should be using this and how do you use it. Okay, diving into the last part, which is inversion. So essentially is fail fair value gap. So typically, whenever there is a fair value gap, means the price will close outside of the fair value gap or imbalances, and the body will close outside of it. And you can identify as typically it will be very, very strong. So turn either a resistance into a supply zone, into a support zone, or a supply flip into a demand zone. So typically inversion, we look for opposite of fair value gap. So for this one, for example, here you can see this is a fair value gap for the buy side, right? So going down, sweeping this liquidity. This is the same example as before. Sweeping this side of liquidity of these equal low, continue lower, went back up, fail this sell side imbalance, and continue lower. Once there is a market structure break, and typically inversion, you want to see candle with good volumes and strong candle. You want the whole body, so you can see this whole body close outside of it. If it's just a wick, that doesn't count as a closure outside of fair value gap. But you can see there is complete close outside of this bearish fair value gap. Once it trades back into here, also aligning with this, there's another bullish fair value gap. So this also has a confluence of inversion and also bullish fair value gap. So this gives you a very strong confluence as a PD array for it to continue higher. And usually I like inversion a lot. Is inversion, you can think of it as if and then statement. If the fair value gap fail, the only high probability chance it will go to the other side is going to be the opposite, right? So in this case, if it failed this bearish fair value gap, it's going to have a very high probability chance it will continue, it will respect this, turn this resistance into support to continue the other direction, right? Basically, this bearish fair value gap is invalidated. Okay, so that's why inversion is very powerful to use, and also we'll show a couple more live example in the chart in the next slide. Right, now let's dive into a live chart here. So looking at around August 15. So something to highlight here, you can see this is the 4 hours that I'm looking at currently. This is a 4-hour time frame. In the higher time frame, you can see this fair value gap that's formed between these three candles. There is a bullish fair value gap or a busy that is formed. All when it comes back down here, this is being respected. And on this day, to highlight here, since the body didn't close outside of it, this fair value gap is still being respected. And one thing to highlight, once this candle here on August 15th on Friday, once the body closed outside of this fair value gap, this becomes a inversion. Okay, once this becomes an inversion, we go down to 5 minutes. Now we can use any PD array here to form an entry around this zone, right? So this is the inversion that we want to take, but we want to take it within either in the 50% or somewhere in the zone here. So what we can use is any PD array. So there is a order block that you can use here. So this is the 5 minutes we're looking at, and one of my favorite is OTE. So OTE is sitting around here. So this is near the edge, and also 50% consequence encroachment, which also a line of this fair value gap. We can let it play out. So okay, let's say we're up into here as around the 60% mark, and then we'll put our stop outside of this fair value gap, and then we'll target this low here, this equal low, which is exactly 2R. We'll let it play out. So you can see it's respecting it. here we go, hit our market. So from this, even let's say you didn't grab it up here, right? Something you can follow is respecting inversion, which tells you this is one to go lower to at least grab this sell side liquidity. There's also another entry here. This is a fair value gap that you can leverage as well. This won't be 1 minute, but I don't have. So you can see this is also respecting it. These two candle, no candle closed outside of it, so this still stands, right? And also still respecting this inversion. So this is an easy inversion to leverage and also fair value gap. But something to highlight is you always want to leverage your higher time frame first, as we highlight. A lot of new traders are not leveraging the higher time frame and they're just grabbing every single fair value gap. So for example, let me take one here. If I say I look at this without looking at higher time frame, that the inversion of the higher time frame already failed. I take a look at this. Oh, okay, there's an inversion. Oh, okay, there's also a fair value gap, right? There are fair value gap over here, and then inversions over here. So I'll put my entry, let's say low entry around the 50% here, and it's my stop, my target up here for this liquidity for 2R. What happened? I got stopped out, right? You need to understand where is the big picture lies. All these PD arrays is relevant if you don't know the higher time frame, where general structure want to go, right? And here, very obvious, like I said, this 2 days respected this fair value gap. This become inversions once this candle body closed outside of it. Okay, now let's continue forward. You can see it's bearish, and then you can see here on this day, I already missed it, went too fast. But here there's a fair value gap. This is a 4 hour as well. Fair value gap formed between here to 10 o'clock. So we go down to 5 minutes in structure. So it's on this day. We can see there is fair value gap we can take in here, right? So same thing, OTE from this internal high to this internal low at 10. That's when this fair value gap was formed. You can take it OTE or you can put it near the fair value gap, which is formed here. Short, stop outside this fair value gap or this high, this candle high, and just target 2R, right? So near down here. So easy trade, right? This is very straightforward. Very straightforward. Okay, moving forward. Let's take a look at a couple more example. Okay. Again, to highlight, you can see fair value gap. That's respecting it. Candle barely close outside of it. Continue respect. Once it close out outside of it, this become inversion. Okay, this become inversions. And then what do you think is you can respect when the price come down to this zone, right? We can use OTE. In this case, this is something I want to highlight. Even though this is inversion, doesn't mean it will have to retrace to inversion. Reason being, there is a huge fair value gap that is formed here. So it will rebalance to somewhere in this zone here, which you will have to zoom in. So let's take a look at 5 minutes. You can see it came close to 50%, so halfway through of the fair value gap, and continue higher. And the next day, when it went down here, continue respecting the fair value gap. And this is usually, let's say, take a look on this day before, if you enter the trade, before you come in through the day to trade this day. When you come in, you see the fair value gap is respecting it. Go down to lower time frame, 1 hour, it's respecting it. And 1 hour, we can see it's forming a bullish, bearish for fair value gap at this place, right? Once this candle closed outside of it, this become inversion. Okay, and something we can take at this is internal low to the internal high near OTE. If we zoom in as well, you can also see there are many PD arrays that can be aligned here. Huge order block that's also aligning with the zone, retracing, grab this liquidity, and higher, right? So this tells you a lot using, just fair value gap from a higher time frame. Without any going through the lower time frame, without going through any of this, you can tell you a lot. This is respecting it once it's breakout, like we said, if then statement. If the fair value gap is not being respected, the only can go other side. Inversion would be respected, right? In this case, didn't go all the way down to inversions, but there's a fair value gap, respected a bullish fair value gap, and continue higher, right? That will be it for today's video. Hopefully this is helpful, and this gives you some insight on how you should leverage fair value gap. Again, to highlight again, do not use any PD arrays. Doesn't matter you're using order block, breaker, or inversion, fair value gap. Doesn't matter which concept you're trading. Do not go to lower time frame first. Always have higher time frame to give you the daily bias. Then you drop down to lower time frame that align with your higher time frame bias. This will give you a much higher probability of your trade working out. All right, that will be wrapping up for today. Stay safe. Happy trading.